Hello everyone. Inflation is up, as we can see from this article from Zero Hedge. So US inflation is up on a monthly basis, but it's down year over year, probably because the month over month inflation from this January was a bit lower than January 2022. So the too long didn't read. Inflation accelerated on a monthly basis. CPI increased 0.5% versus 0.1% in the prior month, which was revised from minus 0.1%. So I would not be surprised if next month we see a revision that increases this month as well, because government and its data. Core CPI up 0.4%, but I mean, the problem was that the market was expecting a lot less. I think the market was expecting 0.2 or 0.3. Let me search it. Irrelevant. The market was expecting less. 0.2, let's say. And it came out at 0.5. So, yeah. The markets don't really loved the news at first, but they seem to be okay now, which is interesting to say the least. We have hotter than expected inflation, and somehow gold and silver are down, which, I kind of made this prediction like 2 months ago, exactly 2 months ago. The main reason why is because we basically have a downtrend, which I had drawn on my laptop, but not on my desktop. But it's something like that. Let's make this a bit thicker and change the color to something like this. So I was expecting a bit of resistance here. Now, the RSI, as you can see, whenever the RSI is below 30, silver is looking interesting. You should not, from my experience, you should not jump at the first touch of 30 on the RSI. Of course, if you buy physical, it doesn't really matter. You're gonna hold it like at least 10 years, in my opinion. But if you want to be efficient, which I do want to be efficient, I learned that I should wait. How did I learn? Well, I bought here. We didn't even touch RSI, but I was happy with the discount, but then this happened. So I bought again. Somewhere in September, I believe. And I did not buy since because I didn't have the funds. And I still don't have the funds. I do, but I have, Christmas debt to pay. I bought basically an entire new PC. This is my vice. I like my desktop to be quite fast, to have some performance oriented parts, if you're into that. So I did spend a bit. But I do believe this could go even lower. But if you want to buy now, I think it's okay in the grand scheme of things. Which is quite funny is that this area here had, from my point of view, two lines of resistance. So it was this downtrend of lower highs, and is this uptrend which goes back a lot. It's like you can trace it back to like 2000, something like that. Yeah. Anyway, I was expecting some resistance here, and it finally broke down. Now this level 22 is also an interesting level, and if we close the week this week by Friday, if we close below this line, there's the probability is increasing that we might go lower. Like we could visit 19, which that would be a good possibility. Now the problem with that would be that okay, spot price maybe goes here, but premiums are gonna increase. So if you buy here or here, I think you're gonna pay the same price per ounce. Why? Because demand is low on silver now, and demand might increase. You know, like coins, bullion demand, and basic supply and demand laws. You know, more demand, you have to increase prices, and I think that's what's gonna happen. So from here to here, if this happens, and it's a big if, you know, it might not. This might go back up, right? But from here to here, I think you're gonna pay the same price per ounce if you buy physical, which I only recommend you buy physical silver or gold. Right. Another interesting thing, the M2 money supply is down. And this did not happen even in the global financial crisis. It like sidelined a bit, but it never actually went down. But if we compare like January 2023 with January 2022, you can see that the M2 money supply is down 400 billion. Which has never happened for such a long period of time. Like yeah, you have like these dips, you know, but they only last 1, 2, 3 weeks. But year over year, and we can check that actually. We can do percentage change from year ago. Right. As you can see, it never happened. It got closed in the 1990s on this graph, which goes back to 1981. But there's another chart with the M2. I don't know exactly what the difference is between them. I think this is like more seasonally adjusted or something like that. And we can also edit this one as well. Percentage change from a year ago. And again, if you go back to 1960, year over year, M2 was never negative. But now, minus 1.3%. So what does that mean? That means I would not be surprised if inflation comes back down. I would really not be surprised. There was a graph with I'm actually gonna try to find it. There is a graph with month over month inflation. And in the first half of last year, uh, monthly inflation was like even 1%. So if we get lower readings now, I think this is the one, yes. Right, we are replacing these months. This is April, this is March, this is February. So we replaced January 2022 with, which was, I believe it was 0.6. Right, we replaced it with 0.5. December was 0.1. So April, March, February. If next February comes at below 0.7, we're going to replace, let's say it comes at 0.4, right? We're going to replace a 0.7 with a 0.4. That means year over year, inflation is going to be even lower. But imagine what's going to happen when we replace the 1% and the 0.9 and the 1.2 with 0.2, 0.1, 0.3, you know? You're replacing higher months with lower months. What does that mean? That means inflation is going to come down from July onwards. So by July, then we should normalize. And I think we are going to normalize at around 3%, 2.5, 3%. This is if this trend continues, you know, with lower readings. It's just maths. You don't have to be mad or something. You can comment if you are, but it's just basic mathematics. Yes, it's headline inflation. We all know that real inflation is higher. But still, 99.9% of the people only care about the headline inflation. And big investors only care about the headline inflation. And that's what's gonna ultimately affect markets, you know. And if we keep high interest rates and let's put a symbol here. US interest rates. Oh, I should have chosen another scale. Sorry for that. New price scale. All right. So if we keep having these high interest rates, which you can see in the scale here, we are at 4.75 right now. If inflation comes down to like 3%, but rates are at 5% by the summer, maybe 5.25, I think the market is gonna come down. They're not gonna care that that real inflation is higher than what the government admits to, and you should keep that in mind. Keep cold hard cash. I think it's good to have some cold hard cash in this period because there might be a big recession coming. You see, I have this this home drawn right here, and this is the chart for the S&P 500. So if we keep going on this trend, we might, I mean, some layoffs might come out. We already see that Amazon and Microsoft, right, Google, they're all laying off people. So you must have some cash, and also pay your high interest debt, especially credit card debt, which I don't have interest on my credit card debt because I'm making like for example, if I buy something that's like $1,000, I can split it into 6 payments with 0 interest rate. So you can use it if you're smart. You pay no interest rate. You're just gonna pay, right? You're gonna pay like $166 per month, right? No interest rate. Like if I, for example, I bought a graphics card, I literally paid $1,000, right? But I'm gonna pay it in 6 installments, no interest rate, right? But I'm not gonna miss a goddamn payment, right? uh, you can be smart with debt, but that means you should have a budget. Just use Excel, put like your monthly income and monthly expenses and see what's left at the end of the month, and you do not spend more than that, and preferably you save a part and then you spend what's left, or save that as well. That's my my only true financial advice. Be smart with that. Right. M1, same story. It's coming down. I should check. Is it coming down year over year also? Yeah, it just went down even year over year. So if we, it's 3.6% down. So if we expected high inflation after when the M2 money supply was up 25%, right, year over year, why should we not at least expect low inflation, not deflation? I don't think we're gonna get deflation unless this trend continues for a long time. But if it like normalizes, if we expected high inflation here, why should we not expect low inflation from here on now? I don't think that's a wild idea. That's what I'm expecting. So that's why I think paying down high interest rate debt is a priority, and having some cold hard cash, and I mean like physical banknotes, cold hard cash on the sidelines, because you never know what could happen in the next 2 or 3 years. Yeah. Also the 10-year treasury interest rates minus the 2-year is still inverted. So it first inverted like last year in April, but then it went positive. When I say inverted, what does that mean? It means that the interest rate on the 2-year treasury is higher than the interest on the 10-year treasury, which is not really healthy. The longer you borrow money for, the higher interest rate you should pay or earn if you lend money to someone. So it first inverted in April, then it went back positive, and then it inverted again in July, and it stayed heavily inverted since. And usually you get a recession like 12 to 24 months after the inversion, right? So 12 months is gonna be this July. It's gonna be 12 months. And 24 months is gonna be July 2024. So by July 2024, I'm expecting a recession. The probability is very high because checking the data back in history, like since 1940 or something like that. It always happened. After 12 to 24 months after the inversion, there was a recession. So I'm still buying good quality companies, stocks, whenever I can, right? But I'm also putting some cash on the sideline because it's the safest thing you can have on the short term, right? Because the safest thing you can have on the long term is gold. But I would not like to be in the position where I'm spending all my cash on gold now, lose my job in 12 months, and have to sell my gold at a loss because I have living expenses. I don't want to do that. I want to be smart with my money, and I hope you guys are going to be smart with your money as well. Crypto, I'm surprised it's still holding up so well. I don't know. I'm expecting, if I'm expecting a recession, I cannot really advise buying crypto. The only thing I can advise is keep it on the watch list, because if it's, let's say, in the next 6 months it's gonna be down 50%, I'm definitely gonna buy some. But right now I would still be cautious, pretty much. What I can say is that I do have an account to buy crypto, and I'm putting some money every month there, but I haven't bought yet. Like with Bitcoin, like below 15,000, that's my target, below 15,000. Right now, it's kind of, I see it a bit risky overall. So I would prefer to hold cash and buy quality stocks and silver. I mean, silver right now is a hard buy. Physical coins, right? Bullion, coins, bars, whatever you can find on the chip. So those are my thoughts for today regarding CPI inflation, CPI number, and I don't know. I hope you learned something useful today. Thanks for watching.